Welcome back. You're watching HFO-TV.
Joe Cortright is the director of the City Observatory, a Portland-based think tank doing original research on urban economic issues. If you're not familiar with it, you guys should really look at signing up for his blog or daily Friday. I think they come out every Friday. It's very informative information about stuff going on, zoning, land use, not just in Portland, but all over the United States and in the world. He's also the president and principal economist for Impreza, a consulting firm specializing in regional economic analysis. He previously served 12 years as the executive officer of the Oregon Legislature's Trade and Economic Development Committee. You have copies of his presentation in your books to help you follow along. So please join me in welcoming Mr. Joe Cortright.
As mentioned in the introduction, I run a little think tank called City Observatory, and we're supported by a number of organizations to look across the United States at cities and metropolitan economies and understand what's making those economies tick, why some do better than others, and what are the trends and factors driving growth within urban economies. And I'll be talking about the work that we do at City Observatory. We have a web page. We do original research. Essentially, all of our research we make available for free on the website. We also have daily commentary on a range of urban policy issues. And as mentioned, you can sign up for our weekly newsletter, which summarizes the work that we do and then hits the highlights of some of what we think are some of the most interesting stories, both regionally and nationally, as they affect urban economies, housing, transportation, and economic development. Today, I'll be talking about these subjects. I'm going to be talking about from the perspective of the economy, the surging demand for cities. I know you're all in the apartment business one way or another, and the demand for urban living is changing fundamentally the market for housing in the United States. A lot of the trends that we see today and that we can expect to see unfold in the next several years are really tied to that demand for urban living that I'll explore for you and explain some of the reasons behind. In the face of that, and what we've experienced particularly here locally, but in a number of high-demand cities in the United States, is a lagging supply of housing. And some of the affordability concerns that occur in the public realm, in the public discussion, stem directly from this mismatch between the growing demand for urban living on one hand and the limited supply of housing that we have in the most desirable locations. And that mismatch is something that we have to address. I'm going to be talking about the critical role of place, because what's behind the demand for cities and urban living are the attributes of place that people value. And we can see very clearly what those attributes are, and I'll talk about the future demand for what I call green, interesting, and walkable communities. That seems to be where the market is headed, and I think that has important implications for all of you. It also has important implications for public policy, and I'll talk about how we need to invest, incentivize, and enable development to support the demand for urban living. So that's a quick synopsis of what I'll cover. Let me begin by talking about the surging demand for cities. And when I say cities, I mean cities not in a political sense. I mean urban areas and dense urban areas. And at City Observatory, we focus on the 50 or so largest metropolitan areas in the United States, all the places with a population of 1 million or more. And we look to see the trends within those areas and then how those areas compare to the rest of the United States. So it's a little bit different lens. And these are some data that were put together actually by the state economist. And they break the United States up into not states or regions, but into metropolitan areas by size. The blue line that you're looking at on the top there is those 50 large metropolitan areas with 1 million or more population. And then there's successively smaller areas, metro areas, and the orange line at the bottom is non-metro areas. And what you can see very clearly is this recovery that John talked to you about has been driven by the growth of large metropolitan areas in the United States. They have grown much faster than smaller metropolitan areas, and much of the rural United States is still below the level of employment that it had prior to the last recession. So growth in the United States is overwhelmingly being propelled by what happens in big urban areas. And there's some really good reasons for that I can talk about in detail. But both the economy and people are moving increasingly to those large metropolitan areas. Another measure that we have is what we call the Dow of cities. And you know, the Dow index measures the value of stocks and bonds. And what the Dow of cities does is look at the difference in housing prices between the center of large metropolitan areas, and the outer edges or suburbs of those metropolitan areas. This is some data that's put together based on the Case-Shiller data, and it basically broke all the 50 large metropolitan areas up into the densest 25% of neighborhoods, the neighborhoods in the center, and then all of the suburban areas. And you can see both of those areas went through a housing cycle. This is the housing prices in those areas. We know that there was a big peak in about 2006, a collapse thereafter, and then a recovery. But you see a real divergence in the home prices between houses in the center of cities, the orange line, and houses on the periphery of metropolitan areas, the blue line. And that divergence tells you that people are paying an increasing premium to live close to urban cores. And that same thing is charted through census data. And this shows you for 4 successive decades, 1980, 1990, 2000, and 2010, what economists call the rent gradient, or the premium that people pay to live close to the center of regions. And 0 there would be downtown of every large metropolitan area in the United States, and 20 is the suburbs at 20 miles away. And you can see that there's a slope to that land and houses get cheaper as you move away from the center. And what you see is that curve has gotten progressively steeper in each year. And what that tells me as an economist is people are paying a larger and larger premium for centrality, to be close to the center. And that is the reflection of the growing demand for urban living. We see the same thing in the Portland metropolitan area. This is a chart that shows you the home price differential between the city of Portland and the suburban 3 counties, Clackamas, Clark, and Washington counties. So city of Portland versus the 3 surrounding suburban counties. And if you go back to the late 1990s, houses in the city of Portland, on average, sold for about a $25,000 discount to houses in the suburbs. A couple of years ago, the last time I gathered this data, there was about a $40,000 or $50,000 premium on average for houses in the city of Portland. A complete inversion of the way that the market values city locations compared to suburban locations. And all of these factors, when you add them together, this growing demand for urban living and the willingness of people to pay for it, should tell you there's a big demand for urban living. And that's colliding with a relatively slow-changing supply of housing in cities. And that's what I'll talk about next. And this is basically a picture of the number of apartment completions in the Portland metropolitan area for the last 20 years, or no, 15 years or so, almost 20 years. And you can see there that we were building on average about 4,000, as many as 5,000 apartments a year prior to the Great Recession. That fell off a cliff for a period of years, and then for the last few years has been booming. So at the same time, there was this growing demand for urban living, which continued throughout this period. We suddenly stopped building much new multifamily housing in the Portland metropolitan area. And this is that same data overlaid with a line that shows you population growth. So population growth sort of flattened out in the recession, but it didn't really decline. So when you add more people moving into an area and the number of new units being completed declining, you all know what happened, which is rents went up substantially, particularly in 2012 through about 2014. But as that new supply came online, and I know you all know this very well, what we've seen is that rent inflation, which peaked in the double-digit numbers a couple of years ago, has basically fallen to 0 in the Portland metropolitan market. Some indices say we're down 2 or 3% year over year over the last year. So the good news is, from a renter's standpoint, not so much from a landlord's standpoint, is supply and demand work. The reason we had a big run-up in inflation in housing prices was due to a shortage in the face of very high demand, and now we're seeing that rental inflation decrease due to the completion of additional units. So let's now talk about what are the driving factors behind this demand for urban living that I've given you evidence of. And what it comes down to is the kind of places that people, particularly young people, and I'll focus on them for a second, want to live in, but I think are emblematic of what John described as changes in taste. People are looking for different things now and will look for different things in the future than they did in the past. Now, we've done a lot of work at City Observatory looking at a group we call the young and the restless, not soap opera watchers, but a group of young adults, 25 to 34-year-olds with a 4-year degree. And what we've done is tracked where they live in the United States and where they have lived over the last several decades, and which cities and within cities, which neighborhoods are attracting the most well-educated young adults. And these young adults really matter from an economic perspective because essentially they are really critical to the growth of regional economies. If you're in the HR department of a fast-growing company, these are the people you're looking for. There are about 1 million of them who move across state lines every year. So they are sort of the part of the economy that is most in play from standpoint of migration. So if you can attract these people, particularly when you're young, you're likely to hang on to them because migration rates fall dramatically as you age. That is, a 35-year-old is about half as likely to move across state lines as a 25-year-old. So this is an economically important group, and time to get them is when they're young. So where are they moving? Well, we've done a series of surveys a decade ago and more recently a couple of years ago, asking a really basic question, which is, are you going to move to where the jobs are, or are you going to choose the place that you want to live and then look for a job there? And by a 2-to-1 margin, people are choosing place first. Now, there are a lot of reasons for that I'd be happy to explore in the Q&A, but we have good evidence to suggest that people are choosing the place that they want to live and then looking for jobs. And within metropolitan areas, we know that the places that they're choosing are what we call close-in urban neighborhoods. So this is a map of Portland. That red circle is a 3-mile circle drawn or basically around Pioneer Courthouse Square. So it picks up all the close-in neighborhoods in downtown, in southeast and northeast Portland. Each of those dots corresponds to additional 25 to 34-year-olds with a 4-year degree who moved into those neighborhoods basically in the decade of the 1990s. And we've repeated this exercise for the subsequent decade as well. You can see that the bulk of the growth in well-educated young people in the Portland metropolitan area was overwhelmingly in those close-in urban neighborhoods, and then to a lesser extent on the west side in Washington County, and very little growth in Clark County and the eastern suburbs. We repeated that exercise for every one of the 50 largest metropolitan areas in the United States. And we found that the number of well-educated young adults has increased about 50% faster outside the 3-mile circle in the 50 large metropolitan areas as inside that circle. So we see this pattern repeated in metropolitan area after metropolitan area in the United States. Well-educated young adults are increasingly moving to, again, these close-in urban neighborhoods. And their pattern looks very different than previous generations. If you go back 20 and 30 and 40 years ago, young adults were slightly more likely than all Americans to live in those neighborhoods. Today, they're more than twice as likely as all other Americans to live in dense urban neighborhoods. They choose those for a variety of reasons. They're looking for places that are dense, diverse, both economically, racially, and demographically, that are interesting, that have things to do, and that have this trio of transportation characteristics. They're bikeable, they're walkable, they're well served by transit. And this movement of well-educated young adults to cities has a really direct implication for economic development and industrial location. Because if you are in a fast-growing, say, tech firm or professional services firm, you're looking for a place that has an abundant supply of well-educated young workers and which is relatively easy to recruit more. So it turns out that industrial location decisions, particularly of the companies that you would like to have in your community and that will grow your community, are driven by the HR department. And that has fundamentally changed the calculus of economic development. So if you look to see where Amazon is building its 2 joint headquarters, or separate headquarters, outside Washington, D.C. and in Long Island in New York, it was for exactly those criteria, because those were places they could find and easily attract lots more well-educated young adults. And that's true of lots of other companies. So when you go to the Boston Globe, and this is not their caricature of Portland, Oregon, this is their description of what they think is driving industrial location decisions in Boston. The decision of companies to relocate to downtown Boston, to downtown Cambridge is because the median worker they're looking to employ is this coffee-drinking, bike-riding young millennial. And that is true not just of Boston and Portland, but of large cities elsewhere. So these people are moving, well-educated young people are moving to cities, and the companies that are employing them are also increasingly moving to cities. We've done a report called Surging City Center Job Growth, which looks at the pattern of job growth within the United States. And basically, for as long as we've been gathering data, jobs in the United States have been suburbanizing. They've been moving away from city centers, thanks to highways, to automobiles, to trucks, and a desire for suburban living. But in the last economic cycle, that pattern has reversed. And when you draw, again, that 3-mile circle around a place like downtown Portland, and you count the job growth in the previous expansion, shown in blue, and then on the left, and then in the most recent expansion, shown on the right, it used to be that the suburbs were growing faster. That's the orange, is growing faster than the blue. But in the last economic cycle, the city center grew jobs faster than in the periphery. We've repeated that exercise for all 50 of the largest metropolitan areas in the United States. Same pattern holds in the aggregate and for most metropolitan areas. Job growth is happening faster in urban centers than in the periphery. Companies are moving increasingly to the urban center. Cushman Wakefield did a report a couple of years ago that charted 500 different companies that either relocated their operations to a downtown location or had their principal expansions there. The number one reason they all cited was because that's where we can attract and retain workers, because they value those locations and it supports creativity. And those companies tend to relocate to places that have high levels, again, of this trio of transportation characteristics. They have high walk score, they have high transit score, well served by transit, and are well served by cycling. Quick question here. Who knows about walk score? Okay, almost everybody in the room. Basically, online tool put together by Redfin that will tell you on a scale of 0 to 100 how walkable any location is in the United States. I'll come back to that in a minute because we've done some research based on that. The other thing we know is this trend is unlikely to be just a temporary one. And one of the best windows we have into the way the economy is moving in the future is the location of venture capital investment. So you can think about VC investments as being a window on where the future growth in the economy is likely to be. And historically, VC investments have gone to suburban office parks. But in the last decade or so, VC investments have overwhelmingly been going to urban locations. These are some numbers put together by Rich Florida. The blue in each case is the proportion of venture capital investments that are either in cities or very close in walkable places. The green is the traditional suburban office locations. So you can see in most of those places where you're seeing a lot of investment, the VC investment is increasingly going to close-in urban locations. So not only has the traditional pattern reversed, the future pattern seems to be more jobs in urban centers, all of which is fueling the demand again for urban living, both because people want to live there and now the jobs are growing there as well. So going forward, our expectation is there'll be a huge demand for places that have these characteristics, that are green, that are interesting, and that are walkable. And I know, for a lot of us, when people say green, it's got this sort of eat your peas environmentalism notion, that we've got to give up something in order to get something. But what I want to suggest to you is environmentally conscious living is actually very good from an economic standpoint, and I'll explain to you why. We've done a report called The Green Dividend, which looks at what are the economic effects of living in places where you don't have to drive so much. And so one of the things that we did was to look at an indicator of how much driving people do in different metropolitan areas. And we ranked all of the 50 largest metropolitan areas in the United States based on something called VMT, vehicle miles traveled. How many miles per day does the average resident drive a car? And those numbers look something like this. The average American drives about 25 miles per person per day. There's huge variation across metropolitan areas. If you live in Atlanta or Houston or Dallas, that number is more like 35 miles per person per day. And that's an average, so a bunch of people are driving more. That red line at the bottom is Portland. Portland drives about 20% fewer miles per day than the average urban resident in the United States. Well, if you drive fewer miles per day, it turns out that you spend less money on gasoline and less money on cars. And we can monetize that. I can tell you how much money Portland area residents save because they drive less than the average American. And the number is, in dollar terms, just for out-of-pocket expenses, it's over $1 billion a year. That's $1 billion a year that people have to spend on the local economy that would otherwise be going to Texaco and Toyota, right? So it's money that they can use, among other things, to pay their rent, but it's also a net boon to this economy because it's money that's respent locally. And it's one of the reasons why, another indicator, this is restaurants per capita of large metropolitan areas in the United States. San Francisco, yes, is number one, but when we did this, Portland had the second, and this is the whole metropolitan area. It's not just downtown Portland or some cherry-picked other geography. It's the second highest number of restaurants per capita. So if you're not spending your money, paying for gasoline and cars, you can spend it on beer, bikes, and Birkenstocks. So green. Second one is walkable. So I quizzed you earlier about walk score. You all know what walk score is. This is an aggregate map that shows color-coded walkability of Portland area neighborhoods. The greenest neighborhoods are the ones with the highest walk scores. Not surprisingly, downtown Portland and a lot of neighborhoods on the Close-in and east side, lesser degrees of walkability in suburban locations with some clusters of walkability. And one of the things that we did a couple of years ago was to look at the correlation between walk score and home values. And we controlled for all of the standard factors that we know influence home prices. How big the house is, how many bedrooms, bathrooms it has, what the income level of the neighborhood is, how far it is from the central business district. After you control for all of those factors, walkability adds a significant premium to the value of houses. And our work that we did originally has been replicated by others. These are some numbers that were put together by the folks at Zillow. And this is the walkability premium for different metropolitan areas, and it's going from a walk score of 60 in a metropolitan area to going to a walk score of 80. So a place that's got a little bit above average level of walkability to a relatively high level of walkability. And in San Francisco, that increase in walk score adds over $150,000 to the value of a home. What that tells you again is people attach value to living in walkable neighborhoods, and that's a demonstrable evidence of that. It tells you there's demand for that kind of neighborhood and that people will pay for it. Another way of looking at this is something that we've done, and again, this is all available on the City Observatory website, called the Storefront Index. And if you've ever read Jane Jacobs, Jane Jacobs talks about the importance of dense urban neighborhoods that are lively, that have a lot of streets and activity. And what we did was sort of try to quantify Jane Jacobs' insight about how cities work by mapping the locations of storefronts. And storefronts we define as retail or service businesses that you would be likely to walk into on a daily or weekly basis as a customer. You would have an interaction with people. So think about grocery stores, banks, restaurants, bars, beauty salons, and the like. And so this is a map of downtown Portland. Again, our 3-mile circle is shown shaded here, and it shows you the clustering of those businesses. And we did one other thing. We only counted businesses if there were other storefront businesses within 100 meters of them. So if you were off isolated by yourself, you don't show up on this map. But if there were other businesses like yours nearby that were also storefronts, this shows you where their clustering is. So, it kind of fits with your map maybe of where activity is in Portland, downtown and along the major arterials on the east side. But then when you do this, and we've done this for every one of the large metropolitan areas in the US, and compare, say, Detroit, which has a little bit of a cluster downtown, but has vast areas nearby that are sparse. Portland has much more density. And then we can compare other metropolitan areas as well. So we have a ranking of metropolitan areas. And again, it kind of aligns with what you think about, what are the really vastly interesting places. San Francisco, 5,000 business storefronts within their 3-mile circle. Portland, about 1,600. Detroit, just 400. Another measure that we've used is we mapped all the sidewalk cafe permits in the city of Portland. You can't operate a sidewalk cafe without a permit. Again, a very similar pattern of activity. That's also reflected in the location of where a lot of the new apartments have been built in Portland. I want to wrap up by spending a few minutes talking about policy. So I hope what I've convinced you of now is that there is a growing demand for this. You won't find these slides, but I'll be happy to make them to you electronically. I added this to the end of the presentation. So if you're fumbling madly to see what's coming up next, I'm going to leave you in suspense for just a couple of seconds. So hopefully what I've convinced you of is there's a growing demand for urban living. This isn't just a local phenomenon. We see this throughout the United States. People are willing to pay a premium for more central locations and for green, walkable places. And those kinds of communities have significant economic benefits for everybody. Now, what is it that we can do as a matter of public policy to facilitate and to harness those trends? And that's what I'll talk about now. And I think there are three things that we need to think about. First of all is investing. How we spend our limited public resources to build our communities matters a lot to how successful they'll be and whether we can have affordability and, as John alluded to, a more inclusive economy. Second, we have to enable things to go on. We have to allow them to happen, and a lot of the regulations that we have get in the way of building the kinds of communities that people most want to live in. And then finally, we should be incentivizing it. To the extent that our taxes and our regulations and our other things encourage people to do things, we ought to be encouraging them to do these things that promote the kinds of living that people want to live in. And first of all, in terms of investment, my view is that a lot of the investments that we're making are not directed towards where the market is moving today. The sets of institutions, the sets of policies that we have us systematically investing in a model for a world of the 1950s or at best the 1970s. And what we need to be doing is thinking to the future and saying, what kind of communities do we need to build and what kind of investments do we need to make to meet the demand for urban living that's out there? And unfortunately, I think in important cases, we're headed in the wrong direction. And I'll pick on a couple of projects in particular. One has to do with widening freeways, and the other has to do with car-centric light rail. This is something I found online, and it's literally from the 1950s. This is something put together by the Oregon Highway Department in 1959, telling us how wonderful freeways would be to the Portland metropolitan area, and that it told us that the top line there is commuters will be able to live further from their job and spend less time traveling to your work. How many people think people are spending less time traveling to work now than they were in the 1950s? It did produce more sprawl, but it didn't reduce traffic or commute times. And this magic carpet view and this magic thinking view still pervades the way we think about highway transportation. I'm going to pick on a particular project. Oregon Department of Transportation is proposing to spend $500 million, $500 million to widen I-5 for about 1 mile near the Lloyd Center. This is the stretch, the Rose Quarter. Now, that's an interesting project. I'm sure we're all frustrated by that. I live not far from there. Traffic backs up there every day. And you would think if they spent $500 million, that would make the problem go away, wouldn't it? Well, you would be wrong, and don't take my word for it, take their word for it. Because both the Oregon Department of Transportation and the Portland Bureau of Transportation say this will not affect the regular daily recurring congestion that occurs in those areas. Travis Bauer won't eliminate congestion in the Rose Quarter. PBOT's Mauricio Clark, it will not benefit the daily congestion. It will maybe, and they're hoping it will, reduce some crashes. And if it reduces crashes, then that will help a little bit with the performance there. But in terms of the regular daily backups there, you'll spend $500 million and it will have absolutely no effect. It's the same as wasting that money. You're just setting it on fire. So I'd call the Rose Quarter Freeway project, either a sacrifice to the freeway gods or the world's largest piece of performance art, because it's not going to resolve our transportation problems, and that's what they say. Similarly, we can look at the proposed Southwest Light Rail project, which is a project that would extend light rail from downtown Portland to Bridgeport Village. And I think light rail has a lot of merits, but one of the things that they're proposing with this project is to spend $170 million building 3,000, almost 400 parking spaces in parking garages. And again, what investing in parking garages does is really encourage a lot more people to drive, and then also forestalls the use of those locations right next to transit for new housing. And one of the things we know is if we can build housing near transit, then we can meet that demand for walkable, transit-served opportunities. So in my view, parking spaces are the wrong way to go, and unfortunately, the other problem with the West Side Light Rail is, or Southwest Light Rail is, very few of the sites near the stations in the city of Portland are zoned for apartments. More than half of it is zoned single family only. So we'll invest upwards of $3 billion in this project and then not be able to meet the demand for housing in those areas, particularly housing that would be affordable. And that's why enabling is really important. And here's the Southwest Light Rail. And again, apartments are banned within about 48% of the land that's within walking distance of the light rail stations. So if we are going to make that investment, we should be doing things that make it easier for people to take advantage of it by being able to live within walking distance of it. And not much thought has been given to that. And again, that's not to be critical of the project, but it's to say that if we're going to take a long-term view, if we're going to prioritize affordability, if we're going to meet the growing demand for green urban living, we should do it by enabling, incentivizing, and investing in ways that make that happen. So final point here is incentivizing, and I may leave some of this for the Q&A, but I think a lot of the things that we're doing in housing policy right now are undercutting our objectives. I've been a critic of the City of Portland's inclusionary zoning requirement. I think it makes it much more expensive and much more risky to invest in new housing, which is exactly the opposite of what we want to do. We want to encourage more housing to get built. And because building all kinds of housing, including market rate housing, improves the supply of housing and reduces rents for everyone, or holds down the increase in rents for everyone, it's better. Second issue is parking requirements. Again, parking requirements are really good for people who own automobiles, but drive up the price of housing for everyone, and especially for those who are choosing to live with one vehicle or no vehicles at all. And then finally, I'll just make this point that I'm concerned that rent control, while there's some real issues there about affordability, tends to polarize or weaponize landlord-tenant relationships. The more that we impose strictures on it, try to control rents through government policy, the more likely it is that we have combative and difficult landlord-tenant relationships, which works to everyone's disadvantage. So to summarize, there's a surging demand for urban living in the United States. And one of the things that has propelled the growth of our economy locally is the fact that we've built a great place that lots of people want to live. The reason that we have attracted the companies that we have, that John can tell you about, Portland's faster growth in the nation, has a lot to do with the kinds of opportunities for urban living that are created here. And I don't expect that trend to change anytime soon. We've had a lagging supply of housing, which is why we've had the affordability issues that we've had in the Portland metropolitan area. So increasing supply is really important. And it's not increasing supply the way we did in the 1950s and 60s by expanding outward. It's really by building the kind of dense, green, urban, desirable places that particularly the next generation want to live in. And our challenge is to figure out how to align all of our policies so that we invest, incentivize, and enable the kinds of places that Americans and Oregonians particularly want to live in. Thanks very much.
Our entire office specializes in multifamily real estate, making HFO the largest multifamily brokerage in the Pacific Northwest. Your success is our passion. Build your legacy with HFO. Call 503-241-5541 or visit our website at hfore.com for more information.